Hello friends, welcome back. In today's session, let's discuss what is transaction. We have already seen what is business and how accounting is the language of business. So, in accounting, whatever facts we record, whatever activity of the business we record, okay, they are all transactions. So, let's understand what is transaction first. A transaction means an exchange of goods and services for money. Okay. So a transaction is transfer of goods and services or cash or any other benefit between the businesses and outsiders. Okay, so let's understand this. There are few statements there in front of you. The first one is purchase goods worth rupees 10,000. It means goods are purchased for rupees 10,000, so there will be a transfer of goods. Okay, and it is in monetary terms for rupees 10,000. So it is a monetary transaction. Now there are two type of transactions. One is monetary and one is non-monetary. So the first one, if you see, let's name it as monetary because I can clearly say goods are purchased for rupees 10,000. Okay. Borrowed from Bank of Maharashtra, rupees 1 lakh. Again, in this case, money is borrowed for the purpose, business purpose. Okay. And then also one more thing is important here that it is affecting the business results. So whatever you do through this transaction, you have to also check if it is affecting the business results. So again, this is in monetary terms. Then this is something charity where goods are distributed as free samples. But again, it is monetary and definitely it will affect the business result. So I'll write it as monetary. Okay. Then wages paid to employees. It is one of the major expenses in manufacturing where you make payment to all the employees. So definitely it's affecting the business result. It is given in terms of money. So again, it's monetary. Next is placed an order for books. Now here, there is no transaction that took place. The order just took place, which can be cancelled also. It is not given in monetary terms. So we take it as non-monetary. Next, received a gift from client, right? The gift is received from the client, okay, from the customer, or maybe from the supplier, or maybe from the bank or any financial institution. But again, it is not in monetary terms. Okay, we don't know how it's affecting the business result. It is a personal gift that has been given. So again, it is non-monetary. Then Vinay gives machinery to his friend for use. Now there are no hiring terms are there like machinery is given for 1 month hire for rupees for so much amount and all. So again it comes under non-monetary. Now why this is important to categorize every transaction into monetary and non-monetary? Because for business we consider only monetary transaction, okay, and we ignore non-monetary. So whenever you look at the transaction, ensure that it is monetary, okay, and it's affecting the business result. So when I say monetary in terms of money, these transactions can also take place on cash basis or on credit basis. I think we have seen it in the last session. So what is the meaning of cash basis? Cash basis means that these transactions where one of the exchange item is cash. It can be check, it can be a draft. So it is a cash transaction receipts or payment of cash or check. It basically involved at the time of effecting the transaction. So whenever transaction is taking place, there is a on the spot payment that is being made. Okay. When we say credit transaction, that means it is a promise to pay at the future date. So both the transactions are considered for business. So that's all for today. So we understood what is the transaction, what is monetary, what is non-monetary, what is cash transaction, and what is credit transaction. So that's all for today. Take care. Bye.